Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today, we're looking at SELLAS Life Sciences.
If you find our talks useful, please consider a subscribe, like, and a comment underneath. It really helps us figure out what you want to hear more of.
We have a really fascinating setup today. It's one of those scenarios that just perfectly illustrates the high-octane, almost gladiator arena world of clinical stage biotech.
It really is.
We're looking at a company that is sitting right on the razor's edge of a massive, what we call a binary event.
I was looking at the chart for SELLAS just before we started recording, and high octane feels like, I don't know, a polite understatement. The movement here is violent.
It's huge.
Just looking at the last 30 days, the stock has surged, roughly 187%? That is nearly a triple in a month.
It's a kind of move that makes headlines and, wakes up the algorithms.
And it's not just the percentage gain that caught my eye. It recently smashed through the $5 barrier. And my notes tell me that's a psychological level it hasn't touched in over 3 years. So clearly the market is waking up. But the big question for you, for our listener, is what is driving this? Is this just a meme stock pump, or is there something, substantial cooking?
It's a mix of market mechanics and a very specific medical milestone.
Oh.
To understand this move, you have to sort of shift gears from how you'd analyze, say, a tech stock or a retailer.
Okay.
SELLAS is a classic event-driven biotech play. The market isn't reacting to earnings or PE ratios or revenue because, frankly, they don't have any revenue yet.
Well, right. They were purely clinical stage. They're spending money, not making it.
Exactly. So the market is reacting entirely to the anticipation of data.
Yeah.
Specifically, the phase 3 REGAL trial for their lead drug, which is called GPS.
GPS. Okay. Easy enough to remember, though I assume it doesn't help you navigate traffic.
Not quite. It stands for galinpepimut-S. And this trial has reached a critical milestone that has investors placing their bets.
Okay.
But before we even get into the biology, which is fascinating, looking at that chart you mentioned, the technical setup is what we'd call textbook.
It really is. I'm seeing a golden cross here. For those listening who might be new to this, that's when the 50-day moving average crosses above the 200-day. It's usually seen as a big green light.
A huge signal for algo traders.
Yeah.
It often acts as a self-fulfilling prophecy because the computers see the cross and just start buying.
And looking at the price action, it's been making higher highs. It dipped down to the 330 range recently, probably shook out some weak hands, but then bounced right back up to that $4 to $5 range. It feels like a floor is being built.
That floor is built on anticipation.
Yeah.
But we have to define the stakes immediately. We call this a binary event for a reason. SELLAS has a market cap that, fluctuates around $400 to $700 million. But remember, they are burning cash. Everything, and I mean everything, hinges on the data readout from this REGAL trial.
So it's essentially a coin flip.
In terms of the stock price reaction, yeah, you could say that. If the data is good, the stock likely re-rates significantly higher, potentially multiples of its current price.
Yeah.
If the data is bad, well, the downside is severe.
Okay, so if we are going to stare down the barrel of a coin flip, we need to know what we're betting on. Let's unpack the bull case. What is this GPS drug actually supposed to do?
So galinpepimut-S, or GPS, is an immunotherapy. It targets something called the WT1 antigen.
Okay.
Now, without getting too bogged down in the biochemistry, just think of the WT1 antigen as a little flag that cancer cells wave. It's found in many different types of cancers, but it's especially prevalent in acute myeloid leukemia, or AML.
And AML is a notoriously aggressive blood cancer, right?
It is very aggressive. And the problem with AML isn't always getting patients into remission. Doctors can often do that with strong initial chemo. The problem is keeping them there. Relapse rates are incredibly high.
So the cancer goes into hiding, waits for the chemo to wash out, and then just comes roaring back.
Precisely. That initial chemo is like a nuke. It kills everything, good and bad. But often, microscopic leukemia cells survive. So GPS isn't trying to replace that initial chemo. It's a maintenance therapy.
Maintenance, okay.
The goal is to train the immune system to recognize any of those remaining cancer cells with that WT1 flag and kill them, essentially keeping the patient in remission longer.
So it's like hiring a security guard to stay in the building after the police have cleared it out, just to make sure the bad guys don't sneak back in.
That is a perfect analogy. And this is a huge, huge unmet need. There aren't many good maintenance options for these patients. The current standard of care is basically watch and wait.
Now, this brings us to the part of the research that really piqued my interest. I was reading through the notes, and there's this very specific data point that has the message boards buzzing. 72 out of 80 events.
Yes.
Can you explain what that means? Why is everyone obsessed with the number 72?
This is the crux of the whole investment thesis right now. This is an event-driven trial.
Yeah.
And in FDA speak, for an oncology trial like this, an event, well, it usually means a death.
Wow. That's incredibly grim. We're waiting for people to die so we can check the stock price.
It is the grim reality of oncology trials. It's all math. You need a certain number of events to have the statistical power to prove one group did better than the other. But here is the counterintuitive part, and this is what the bulls are latched onto.
Okay.
The fact that it has taken a long time to get from 72 deaths to 80 deaths is actually a bullish signal.
Wait, walk me through that. Usually delays are bad. You miss a deadline, your stock goes down. Why is a delay here a good thing?
Think about it this way. The trial has patients on the GPS drug and patients on a placebo. We know, historically, how fast patients on standard care typically relapse and pass away. It follows a predictable curve.
Okay, so there's a baseline expectation.
Exactly. If the GPS drug wasn't working at all, you'd expect the deaths in the trial to happen at that historical rate. The events would pile up quickly. The trial would have ended months ago.
I see. So if the drug did nothing, the security guard is asleep, and the bad guys come back right on schedule.
Right. The fact that the death rate has slowed down, that it's dragging out, implies that the patients still in the trial are living longer than the models predicted.
So the delay implies survival. And since we know the control group doesn't usually survive this long, the inference is that the GPS drug is what's keeping people alive.
Precisely. It suggests the security guard is doing its job. Now, we have to be careful. The trial is still blinded. We don't know for sure which group is living longer. It could theoretically be a statistical anomaly.
A lucky streak or something.
It's possible. But in AML, standard care hasn't shifted that dramatically. So statistically, a slowing event rate at the tail end of a trial like this is often a precursor to positive data.
Okay, that makes sense. It's like a detective clue before the final reveal. But let me challenge this a bit. Let's say GPS hits a snag. Is SELLAS a one-trick pony? If this fails, does the company just go to zero?
That's the right question to ask, and a lot of single-asset biotechs are like that. But SELLAS does have a secondary asset that is generating its own excitement. It's called SLS 0009.
SLS 009. Catchy names are clearly not their strong suit, but tell us about the drug.
It's a CDK9 inhibitor. So again, without the heavy jargon, this is a small molecule drug, not an immunotherapy like GPS. They ran a phase 2 trial for relapsed or refractory AML.
So these are the toughest of the tough cases, people who have already failed other treatments.
Exactly. These are patients with very few options left. And the data showed a 46% overall response rate, or ORR.
And is 46% good? In school, that's an F. In baseball, you're a legend.
In this specific patient population, it's very, very impressive. For patients who'd had certain prior treatments, that response rate went up to 58%.
Wow.
To put that in perspective, standard response rates in this setting are often in the single digits or low teens.
So getting almost half of them to respond is a big deal.
It is. And I see here in the notes it has orphan drug and fast track designations from the FDA.
Does that actually mean anything financially, or is it just a sticker on the box?
Oh, it means a lot. Orphan drug gives them tax credits and 7 years of market exclusivity if the drug's approved. It blocks competition. Fast track means more meetings with the FDA, a faster review process.
Got it.
Their regulatory badges of honor. It really differentiates SELLAS from a company that has nothing else if the lead drug fails. SLS 009 is a legitimate pipeline in a drug.
Okay, so a lead drug that seems to be keeping people alive, plus a backup drug with solid phase 2 numbers. But talk to me about the smart money. Is anyone else betting on this besides retail traders on message boards?
Yes, and that's a key part of the bull case. You always want to see if the insiders are eating their own cooking. And here, we saw director Catherine Bach-Callan increase her stake by over 150% recently.
That's a confident move. You don't triple your position if you think the ship is sinking.
Exactly. Insider selling can happen for a million reasons. Buying a house, taxes, whatever. But insider buying usually only happens for one reason.
Yeah.
They think the price is going up.
And what about institutions? The big boys.
We have them too. BlackRock has reported a 5.4% stake.
BlackRock. We own everything, BlackRock.
The very same.
Yeah.
Now, to be fair, they own a piece of almost everyone because of their index funds. But when the biggest asset manager in the world holds a 5% position in a micro-cap biotech, it adds a layer of credibility. It provides a bit of a base.
And the Wall Street analysts. What are they targeting?
The consensus price target is roughly $7. Considering we're trading in the $4 to $5 range right now, that implies pretty significant upside.
Okay, speaking of cash, we have to talk about the boring stuff. The plumbing. Biotech burns cash like a bonfire. Can they actually afford to finish these trials?
This is usually where the story falls apart for small biotechs. They run out of money. But SELLAS made some strategic, though painful, moves here. As of mid-2025, they had about $25 million in cash.
Which, in the world of global clinical trials, is basically lunch money.
It doesn't last long, correct. But they recently exercised warrants, which brought in roughly $30 million more in fresh cash.
So they essentially sold more stock to raise cash.
Effectively, yes, which brings their total liquidity to an estimated $73 million. Now, the trade-off is dilution. You're adding more shares, which usually hurts the stock price.
Because my share is now worth a slightly smaller percentage of the company.
Exactly. But in this case, the market seemed to forgive them. The reason is simple. The alternative was running out of money right before the finish line. That $73 million extends their runway well through the trial results.
So they bought themselves time. They are still losing money, but the piggy bank is full enough to get to the big reveal without having to panic.
That's it. It clears the deck of financial distractions so everyone can just focus on the data. It removes the immediate bankruptcy risk.
All right, you've painted a pretty rosy picture so far. Good science, insider buying, cash in the bank. But my job is to be the skeptic. Let's play devil's advocate. What happens if this goes wrong? Give me the bear case.
We have to be blunt here. This is a binary risk stock.
Right.
If the Regal trial fails, if they unblind the data and there's no difference between GPS and the placebo, the stock will crash.
And by crash, you mean?
I'm talking a potential 50 to 80% drop, probably overnight.
80%. That wipes out almost everything.
That is the reality.
Yeah.
If the lead asset fails, the valuation premium evaporates instantly. The market will punish them, and investors often flee immediately.
And speaking of valuation, some of the metrics look a little rich, don't they?
They do. The price-to-book ratio is hovering over 15. Compared to its peers, that is expensive. The valuation right now is entirely based on hope. There's zero revenue to support it. You take away the hope, the math gets ugly fast.
I also wanted to ask about some of the chatter I've seen online. You know, on StockTwits, Reddit, there are these rumors flying around about a buyout. I saw a number like 25 billion being thrown around. Is there any truth to that?
We need to be very, very careful with that kind of euphoria. There's absolutely no confirmed source for a $25 billion buyout. That is pure retail speculation.
So don't mortgage the house based on a rumor from a guy named StonksLover69.
Please don't. But, don't throw the baby out with the bathwater. A partnership is a realistic possibility. They're already collaborating with Merck. If the GPS data is good, it's very likely a major pharma player would want to partner up or maybe acquire them. But the numbers being thrown around are often detached from reality.
Solid advice. Okay, so for the listener who is interested, let's map this out. What's the timeline? What should they be marking on their calendar?
The big one is the unblinding of the Regal Phase 3 data. Everyone is watching the count. We're at 72 events. We need to get to 80. The expectation is this happens in Q1 2026.
Q1 2026. So we were in the window right now.
We're in the hot zone. The trigger is reaching that 80th death. Once that happens, the data is analyzed and released. That is the moment the stock moves.
Are there other dates to watch while we wait? Or is it just radio silence?
A few things. Keep an eye on enrollment for the new SLS 009 trial, also starting in Q1 2026. That shows their backup plan is moving forward. And of course, any presentations at medical conferences like ASH could move the needle.
And in terms of price levels, what are you watching?
Watch that $5 level. It was a ceiling for 3 years. Now the bulls want to see it turn into a floor, a support level. If it holds above 5, that's very bullish. If it breaks down, the next major support is around 350.
Okay, so $5 is the line in the sand.
It really is. It's where the psychological battle is being fought right now.
Yep. So we've covered the science, the money, the risks, and the timeline. Give me the elevator pitch. If someone asks me about SELLAS tonight, what do I tell them?
You tell them SELLAS is a classic, high-risk, high-reward swing trade. You have a late-stage asset in GPS targeting a massive unmet need in leukemia. You have a backup asset in SLS 009 with really promising data. And you have insiders buying. But
there's always a but.
But it all comes down to the unblinding of the Regal trial in the next few months. It is not an investment for the faint of heart. It is a bet on the data. If the science works, the upside is significant. If it doesn't, the downside is brutal.
A bet on the data. I like that. It strips away the emotion. It's not about the chart or the rumors. It's about whether the drug actually helps people live longer.
Exactly, and that's what makes biotech so fascinating. It's capitalism and science colliding in real time. You're betting on human ingenuity against biology.
Well, I, for one, will be watching that ticker closely this quarter. This has been a great breakdown. A quick reminder to everyone listening. We are just two voices on the internet. This is for informational purposes only. We are not financial advisors, so please do your own homework.
Absolutely. Always do your own research.
We'll see you in the next one.